it becomes a downward spiral of what's called deflation. In other words, prices start to fall, which sounds good at first, but deflation is like poison for an economy. It discourages spending, incomes stop growing, and companies make less money. And China's economy could have easily turned into a full-blown recession, which is also why the People's Bank of China stepped in and started up the good old money printer, and here's how much money they just printed. First, they lowered what's called the reserve requirement ratio for banks by 0.5%, and that's estimated to free up about 1 trillion yuan, or roughly 142 billion US dollars for new lending. This money is now available for banks to lend to businesses and households hoping to jumpstart the economy. But that's not all. The bank also cut its 7-day reverse repo rate, which is basically the rate at which banks lend money to each other in the short term. And that went down from 1.7 to 1.5%. And I know that doesn't sound like a lot, but it's a big deal because it lowers the cost of borrowing across the economy. Think of it like shaving off a little bit from your mortgage rate, which might not seem like much, but it adds up into billions of dollars in savings across an economy the size of China's. And for consumers, the central bank has announced a 0.5 percentage point reduction in the interest rate on existing home loans. For context, if your bank called you right now to lower your 30-year mortgage from 6% down to just 5.5%, on a $400,000 home loan, you would save approximately $45,000 in total over the life of the loan. Now, for China's economy, it's estimated that this will save 50 million households around 150 billion yuan, which is about 21 billion US dollars a year. But wait, there's more to this package. China's also propping up its own stock market because the People's Bank of China announced a 500 billion yuan, roughly 70 billion US dollars, to help institutional investors like their insurers, brokers, and funds to buy more stocks. Essentially, they're making it easier for institutions to access liquidity to prop up the market. And on top of that, China's also introduced a 300 billion yuan, about 42 billion US dollars worth of a loan program to help companies buy back their own shares. That's like if the Federal Reserve and Papa Powell just called up Apple and said, "Hey Tim Apple, we'd like to extend to you a loan